To go now before US President Donald Trump announces his tariff plans, the world is clearly on edge. Trump is calling it a liberation day for America. But what exactly are tariffs and what is at stake when it comes to Indian exports? My colleague Anurag Joshi has put together this report.
Tariffs, in simple terms, is a tax that US would levy on goods coming in from other countries. Now, as Trump's reciprocal tariffs kick in, Indian sectors like pharma and tech could feel the heat. Exports may get pricier and also lose their competitive edge. India currently has a $46 billion trade surplus with the US, but we are just 2.4% of America's total trade pie. India has been negotiating with US on the tariffs after Prime Minister Narendra Modi met Trump in Washington, D.C. in February. The key takeaway from Modi's last US trip is a proposal to negotiate the first tranche of the bilateral trade agreement by the fall of 2025. And it is a big deal for India as her exports to US were about 18% of the total exports in 2024. Through his campaign for a second term in the White House, Trump had been a vocal advocate of checking unfair trade practices of other countries. The US president believes other countries prospered at the cost of the United States, which historically levied lower reciprocal tariffs. Other nations affected by tariffs include Canada, China, and Mexico. Tariffs affect trade and in turn stock markets feel the heat. Equity markets of India, China, and Hong Kong have, however, bucked the broader downturn in global stocks over the past month. Gains in Indian shares followed a market rout that is said to have erased over $1 trillion of market value over the previous 4 months. Motilal Oswal forecasts a minimal impact of the tariffs on India, though 6 sectors, machinery, gems and jewelry, pharma, steel and seafood, are the most vulnerable to the US tariffs. Foreign investors cut net sales of local equities to about $400 million in March from nearly $4 billion the previous month. FPIs, however, are still net sellers of over $14 billion of domestic shares so far in 2025. The story of tariffs has just begun, and it's impossible to say if there will be any winners in the end.
Indeed, the world is bracing for impact. The large street, of course, no exception. US President Donald Trump hours away from dropping his next big economic bombshell on what he calls Liberation Day. So reciprocal tariffs are set to hit the world. You got an indication of what those really are and how significant they are for India. So this is, of course, a revelation that will happen at 1:30 a.m. Indian Standard Time. Clearly, global markets feeling the tremors. The big question for Indian investors is how will the Nifty react on the 3rd of April? Will it dance to the tunes of Wall Street's jitters, or will the resilience of domestic optimism keep the markets afloat back home? The anticipation is quite palpable. The tariff plan of Trump remains shrouded in uncertainty. There are whispers of a flat 20% import duty or maybe a tiered structure that targets specific countries, specific sectors even. Either way, the impact could ripple across global trade and influence several sectors, IT, pharma, auto sectors. All of these are heavyweights on the Nifty. Meanwhile, the White House has already taken a swipe at India's 100% tariff on American agricultural products. Also, there is the potential oil price shock as crude markets are bracing for demand concerns. But having said that, Indian markets have shown remarkable resilience. They've rallied ahead of the announcement. The Nifty hitting 23,330, the Sensex gaining nearly 600 points today. So it seems investors believe that India's negotiations with the United States could cushion the tariff blow. But will that confidence hold once the details are out later tonight? To decode the potential fallout, the possible opportunities, we have two sharp minds with us today. Rajkamal Rao is Managing Director of Rao Advisors, and he doubles up as an op-ed columnist. Joining him is the ever-trusted market expert, our longtime friend at ET Now, Ajay Bagga. Gentlemen, good to have you with us at the top of a rather crucial evening for the Indian markets, for the Indian economy at large. But let's break it down up front. Ajay, how much of a storm is really brewing according to you for the Indian equities? What should investors brace for when markets open for trade tomorrow?
Yeah, worst case scenario is across the board 20% and then you having to negotiate. I think that's the worst case scenario. But Vikram, a lot of it has got baked in. And today, surprisingly, the way Indian markets went up, I thought there is some informed buying on a good outcome today. So I'm going in optimistic. The worst case scenario is 20% odd duty on all Indian imports into the US. And then having to negotiate it downwards. That's the big shock that could come. It could then lead to some jitters on the EMS plays, on the engineering plays, on pharma, on textiles. All these companies, tomorrow you could see a minor blip, but most of it, I think, has got factored in already, Vikram. And the overlying theme is that India is going to do a bilateral trade agreement. So even if there is some disruption, it will be for a few months and it won't be permanent.
So you're not expecting anything that lasts too long. Mr. Rao, do you concur with this about the potential impact on sectors like agriculture, like the automotive sector? How do you see these tariffs affecting specific industries, and which sectors do you believe are going to prove to be the most vulnerable this time?
Thank you for having me. I agree. I agree with what was just said. This is going to be. I think the key word is bilateral. So it is bilateral between the U.S. and India. It's bilateral in terms of different industries. We can take some clues. Obviously, as you said, we're going to wait for the official announcements. But Howard Lutnick, who is the Commerce Secretary, he was also the transition chairman for the Trump campaign 6 months ago. He has given us a few clues. He has said that we should only put tariffs on stuff we make and not put tariffs on stuff we don't make. Right. This is from the American perspective, right? So that means that there are things that America doesn't make. So jewelry, I think, was mentioned in your report. Pharmaceuticals is another area. I mean, most of the pharmaceuticals that are used in the US are imported from India. So I think those will be relatively on friendly turf. I think automobiles and components, I think it's about $7 billion. I think that can get hit.
Yes.
He has already talked about, as you said, agricultural products. I think there is a 100% tariff today that India imposes on American agricultural products. So that I think could come up. So I think you're right. It is all the devil is in the details.
Right. The devil and how big that devil is going to be revealed not too much later tonight. Ajay, what's your sense about the sectors that will be most affected? We are talking about agricultural and those kind of moves as far as India is concerned, just ahead of the possibilities that the Trump administration is going to subject us to. We've seen that move coming through, lower EV tariffs as well. Now, what strategic implications does this have in the context of the announcements tonight, and the sectors that you think will be most affected despite Indian moves to be able to assuage the kind of talks that we've got from the American side?
Yeah, that's a very good point. And, coming to agriculture, for example,
Yeah.
the US subsidies are nearly 100% of the cost of production. And it is a huge corporatized kind of agriculture that takes place in the US. They can beat us on price because of the subsidies. They can beat us on quality also. So obviously, the government can't open a sector on which about 60 crore, 70 crore Indians are dependent. We can't open it to this kind of untrammeled entry. I'll give you an example. Japan has a 700% duty on US rice. Now, you would say Japan, with the demographic issues, doesn't have farm labor. Very few farmers are left. They still levy a 700% duty on American rice. So some things are very close to the heart. And for the Indian government, reducing duties on agriculture will be an impossible task. It will be political harakiri. On auto, Vikram, it's a twin-edged sword. As a consumer, I would like it to be opened for duties to be brought down with a proviso that technology comes in and onshoring of factories happens. So that could be one way. Automobile majors will definitely oppose it. But what is happening? As consumers, we are driving really outdated cars and very overpriced cars. So one way to catch up with China would be to welcome in technology and lower the tariffs while giving some protection to the domestic industry. It is very important in our manufacturing base that the auto industry stays robust.
Yes.
Steel, aluminium already facing the heat. Auto component suppliers have some factories there which they will retool, and some they will have to pass on the tariffs. Pharma is a wait and watch. At an EPS level, it's a 4 to 5%. EBITDA level, it's a 8 to 9% hit. If universal pharma tariffs come in today at 25%, so $8 billion of our exports into US get hurt. Chemicals again on the same boat. So we'll have to wait and watch on that.
So while we are talking about the kind of sectors that affect India and US trade, Mr. Rao, and we are touching upon it in great detail, but when you look at the overall shift in American trade policy right now, there's so much talk about how this will hurt the American economy and recession will be brought about, because you're talking about impact on the key trade partners of the US, particularly China and the EU. So do you see that recession coming, and how much of that has been factored in by the Trump administration? Because there's no clarity in however Trump has seen the full impact playing out. He keeps saying we'll see, but how much of that is going to actually play out, and how is that going to disturb the global economy and emerging markets like India, you think?
Oh, that's so Vikram sir, that's the central part of the debate, isn't it?
Yes.
Because this is going to be so earth-shattering. Nothing that he's saying is new, though. I mean, I remember in 2019, all of a sudden he said that India will lose its protective trade status, and I think he began levying duties on 2,000 products. You'll recall that this was in 2019. But this, you're right, this is going to completely, it is going to change the world order, as you said. Emerging economies are going to get hit. America is a very wealthy economy, and so it's a very wealthy market for a lot of emerging economies. And therefore, it is definitely going to change the rules of the game.
Yes.
Just one thing that Ajay sir said that I want to clarify. I'm not so sure, sir, that pharmaceuticals will be impacted as much. Trump is facing domestic pressures to keep the price of drugs low.
Yes.
And, you know, with all the DOGE and all the efficiencies that they're trying to do, and the HHS layoffs of 10,000, 15,000 people, they want to keep drug costs low. That's a political loser for him. If you were to levy tariffs and the pharmaceutical companies in India were to pass those tariffs back in higher prices, I think that's going to backfire. So I'm just hoping, as somebody, you know, but logic doesn't always play a part here, you know. But that's something that I wanted.
That's
to
a key
clarify
element.
from
Do
my
you want to
point.
take that on, Ajay?
No, absolutely. I totally agree. And right from November, I was saying pharma, they can't touch. They're spending $850 billion. It's a
Yes.
bloated pharma healthcare bill. And we are a key provider, in fact. But, you know, the issue is more the 100 billion that's coming from Ireland. So Eli Lilly or Pfizer all have headquartered in Ireland.
Yes.
And actually, not much is made there because of tax haven status. It's coming via Ireland. And we might get caught in that. So that is the bigger issue. 100 billion of imports coming in from Ireland on pharma is the bigger issue for him. There is German, there is Swiss. We are fourth or fifth biggest. So we are smaller. But in case it's a sectoral thing, like steel and aluminium, if a sectoral thing comes on pharma, we might be. And again, I totally agree with you that it's not rationality. And clearly this time around, you know, with Scott Bessent saying we are detoxing the economy, de-addicting you from the government. And secondly, Trump saying that short-term pain might be there. Yesterday, the White House press secretary made a very telling statement. She said, stock market is a snapshot. We are looking at the Main Street getting benefited from our moves, and stock market, Wall Street will be okay. So she was a little dismissive, which wouldn't have happened in Trump 1-0. They have just won the 2 Florida seats.
Yes.
So they are coming off with more confidence.
Yes.
And I'm more afraid of a sectoral thing. Later on, we'll negotiate out that generics will not be tariffed at 25%. All that will come.
Yes.
But right now, in case he does a sectoral,
Right.
That's the thing.
Right. So there are so many ifs about this, but considering the preemptive tightening of investment restrictions by China, Ajay, how would this escalating trade tension perhaps indirectly influence the sentiment in the Indian markets and the performance of so many of these export-oriented companies that are listed on our exchanges?
It's been done so badly, Vikram, that everybody is tired. It is Tea Day, Tariff Day, but it's not a liberation day for any of us.
True.
The uncertainty won't end. It's not like your board exam where you throw away the books and say, after 3 months, I will open my books when I get to college, over with my school studies. It's not going to be that. It's just one more step in a continuum. So it's been done in an organized chaos way, on purpose at times, and unintendedly at times. On the same day, tariffs have been announced and they have gone back on it. So there is a cycle. There will be announcement, there will be rollbacks, there will be retaliation, rollback to those retaliations also. So a lot more still to work through. What the markets have, I think, figured out. If you see the positioning today, Vikram, there are not excessive hedging on the downside. The market is not so worried.
Yes.
I don't know why. And especially the Indian market going up today, I really thought some informed buying has happened and we are getting some good news, because there was no way for the market to go up today.
But the information, if it was informed buying, Ajay, you would know of the information.
No. We know from you guys only. When it reaches you, we come to know. We try to deduce, but Vikram, even in the US market, the option pricing is not off. So it is not catastrophic.
Right.
And the hard data is still strong. GDP now data for Atlanta Fed is minus 3.8, but that's because Walmart has brought in 6 months of supplies.
Right.
Everybody has filled up all the warehouses they could. So I'm saying even the next 3 months, we might not have an impact of the tariffs. So markets are now saying enough of you, 2 months, we will wait it out.
Yeah.
And you're not seeing an inordinate amount of shorting in the market or hedging in the market.
Fair enough.
That's one thing I'm seeing, Vikram.
Fair enough. But Mr.
Vikram,
Rao, when you talk...
Vikram, I just want to make one point here.
Certainly, go ahead,
if you
sir.
don't mind. The thing is, we are only talking about tariffs and we are talking about, the financial impact. But, ultimately, trade is a zero-sum game. Let's not forget that, right? The relief that Trump is promising in order for you to not be tariffed is that he wants companies to relocate to the United States and start manufacturing plants, hire American workers and all that, just make capital investments in the US so that the US economy grows. But the point here that Trump doesn't seem to understand is that, take India, for instance. It is not reasonable for a pharmaceutical major in India to relocate its plant in the US and produce. It's not going to happen. And as Ajay sir said before, even when it comes to agricultural products, if India were to move its agricultural processing here, that would mean a loss of jobs in India. So essentially, a loss of jobs in India is a gain of jobs in the US.
Yes.
And that is not that's what I said, it's a zero-sum game.
Fair enough.
And that is where I think a lot of countries will have difficulty in processing this whole debate.
Yes, but Mr. Rao...
even when you sit down and talk about negotiations,
Yeah.
how can you meaningfully negotiate a downshift in your own economy, in your own employment, to help out the US? And that's where it can happen in some cases. Certainly, like, in where it is automated, heavily automated, like auto plants and so on, it can happen.
Yes.
But not in the more labor-intensive industries in which India has an edge.
Right.
I don't know how that's going to work.
Fair enough. But also from the American side, Trump's team is considering giving tax refunds or dividends from these tariffs. And that itself could cause inflation in the United States. How do you think the Indian markets would react to a spike in American inflation? Because that would mean the Fed would have to move differently.
Yeah, it's going to have an impact on us. We are expecting emerging market flows to recover by June, and it could postpone that. So the US economy data, apart from this GDP data, because of the negative print on very, upfronted imports, if you take that out, the US domestic economy is doing very well.
Yes.
Friday, you will get the payroll data, 150,000 jobs is expected, should be in that range.
Right.
Today, the ADP numbers have come pretty strong. Jolt's numbers came very strong. So overall, hard data is good, Vikram. Sentiment is spoiled. Consumer sentiment is at 12-year low. Business sentiment is spoiled. Deal making has stalled because what do you buy? You don't know right now what will be the government policy. Second, the big message that's gone out that Trump's signature carries no weight because he signed the new treaty which replaced NAFTA. He signed it and he's come back and he has appended it. So
Right.
he can throw out any agreement. So based on that, how do corporates? So every corporate I know has a tariff war room set up. They are doing scenario forecasts. But the easier thing for boards to say is, let's wait this out. Let's wait out 2 more months.
Yes.
Let's get more clarity.
Fair enough. And meanwhile, if the US dollar strengthens, Ajay, and if it does so significantly because of these tariffs, tell us if there are immediate implications for Indian companies which have dollar-denominated debt or at least a significant export revenue. How should equity investors factor that into their analysis as they position for what could come through tonight?
They will not want the dollar to strengthen. That's one of the unstated things. Trump wants a weaker dollar, lower yields.
Yeah.
And there is a conspiracy theory that he's trying to, make an accident in the US economy and bring out a recession. So the Fed is forced to cut rates. They've got $7 trillion to roll over this year, $10 trillion to roll over next year, which they obviously want at lower yields. So
Right.
I'm not very afraid of a very strong dollar or a weak rupee. I don't think that will happen.
Fair enough.
Our domestic macro is coming up very strongly. So that will help us. But the incremental flows will stay in the money market funds. Vikram, their money market funds are now $7 trillion.
Yes, correct.
So, and that's gone up 2 trillion in the last 2 years. So
Correct.
when you have such high rates, you're making 4% on a dollar safe haven instrument.
Yes.
You don't want to come and make 5.9 in India. So we have to give more equity risk premia. We'll have to deliver 12, 15 or bring our valuations down.
Yeah.
That's where you could see a crash in India. That people saying I'm better off with that phone.
That's right. Well, we're running out of time. I would have loved to
say.
have a longer discussion, but Mr. Rao, Ajay Bagga, thank you very much for joining us. And of course, we will have to do the analysis post the announcements, the big announcements that are made later tonight to factor in exactly what it holds for Indian equities and for the journey ahead and whether or not we are able to attract as many investments and if Indian equity markets can be that safe haven as well. Well, thank you, gentlemen. Always a pleasure having you on India Tonight. We take a quick break on the other.